Hey, Happy New Year to everyone. I wanted to give a quick market summary of what's going on in the real estate market. I thought this might be helpful. I'm going to send these out from time to time, and you're on my list because you're people that I've worked with in the past. And it's always just good to get kind of a good summary of what's happening in northern Colorado in terms of the real estate market. So I wanted to give this to you real quick. I'm going to kind of go over 7 things real fast and kind of give you a sense of what's happening in the market and kind of my observations about it. See, and hopefully it's helpful to you and helpful information. First thing, inventory is woefully low in our community. We do not have a very good situation in terms of the number of houses on the market. So what you're seeing a lot of in the market right now is still a competitive market, still seeing multiple offers on houses that are priced well. There has been a little bit of relief in new construction. The builders are still building, they're still doing what they can. And what we saw in the later spring last year with plywood pricing and lumber pricing going through the moon, where builders just really stopped and sort of settled down on their pricing and kind of put a pause button on things. That's changed. Prices are higher, but they are moving in the right direction now. So there is some relief in inventory, which isn't quite as competitive as it once was. Obviously, always in new construction, we pay a little bit of a premium because of that newer build and the costs are higher. But what you might be seeing is actually some of those older homes that are being competitively bid up. Worked on a contract the other day where we were $35,000 over asking price, and we didn't actually win the contract, and lots of appraisal gaps and inspection waiving and some of that stuff. While you might be paying a premium in new construction for the price per square foot, you aren't in nearly the competitive market that you are in standing inventory. So anyway, just kind of one of those interesting things that's happening in inventory. Still short, still low on those things. If you're looking to sell your house or move money from one place to another, it is a really good time to do so. It's because of that low inventory, you're going to see a lot of things happening that are going to be towards the seller's advantage. Makes it challenging on the buy side, but as the seller, if you're looking to sort of get at the high side of the market right now and be able to determine some of the things that you want, such as post-occupancy closings and things like that, the inventory is in your favor. Pricing, seeing a general increase still this year, somewhere in that 7 to 10% depending on the community. So what you bought your house for last year, appreciation wise, or if you bought your house 2 years ago or 5 years ago, we're starting to see that tick kind of move up still. And this last year has been in that 7 to 10%. I don't expect anything different for this next year for a number of reasons, one of which is water. Water's super challenging right now. We're seeing a ton of pressure in the outlying suburban communities around Fort Collins and Loveland because of a couple of district issues and a couple of other things that are happening generally within the region, where we have a moratorium on building permits east of I-25, sort of in the Severance, Eaton, Alt area, anywhere in the Northwell Water District. You're seeing a moratorium on building permits that will last until May, which means that no new construction, which is traditionally the relief valve, that will not be happening until May. Maybe even longer, we're not sure. That moratorium started in September. There's been no new permits issued in Severance or Eaton or in the Northwell Water District since that September time period. So that's going to put some pressure on existing inventory. It's going to make things kind of rise and be in a different place. Generally speaking, water in this community continues to be challenging. Building permits and water, just the raw water tap in some of these districts is exceeding $100,000. Little Thompson's Water District stuff is $88,000. Anything that was in the Northwell Water District just raised their planned investment fees by almost 4-fold. So lots of expenses that are going to come with water, which is going to make pricing continue to go high. That is existing will start to sort of raise to that and continue to have that upward pressure. And with the lack of inventory that we already have, and then a shutdown basically of new building situations on the east side of I-25, there's going to be a tremendous amount of pressure in some of those areas. Greeley continues to have water and function well in water. Same with Johnstown and Milliken. Some of these other areas that have water treatment facilities or an ability to buy from a provider that isn't in that moratorium situation. Those areas are going to continue to have some new inventory that's going to come up. But if you figure that some of these outlying communities that have been a traditional relief valve for Fort Collins and Loveland are no longer going to be available to have that inventory, it'll be a little bit challenging for there. Future development, a lot of stuff up in the air. Politically, in our community, there's generally always been an anti-growth sentiment about this stuff. And so the explosiveness in growth has really put some pressure on some of these communities to be in a position where they are struggling to know how to handle it. They're struggling to know what to do with it. How do we move forward? And so I think generally projects are going to be harder to get done. And I think those projects that do get done are going to have really expensive land costs with them. Land and water will be really expensive. They will all be generally handled through a metro district, and that's going to put a lot of pressure price-wise on things to make things more expensive. If you own houses, this is all great news. It's doing stuff that's going to put some upward mobility on your pricing and what your asset is worth. Those of you that are trying to get into the market or first-time home buyers, this is going to be a really challenging environment, and it's going to remain challenging for people to get involved with this. It's going to take some pretty savvy thinking and some pretty creative ways to get that done. So just know that it's good news on one hand, but also challenging to enter the market on the other. Generally, resale versus new construction, we're seeing this kind of weird equilibrium happen simply because of the competitiveness in the resale market, where normally new construction is typically a premium for that. We're starting to see that kind of equilibrium happen between those two things. That's unique in a market. It doesn't happen very often, but it is happening currently. It won't be eye for eye for square foot, but the pricing generally to enter the marketplace, you might find that it's easier to get into new construction than it is to resale, just simply because of those things. We'll see what happens with new construction, just generally because of the water situation. Could be really challenging for the next 6 months in our market. Last thing I have for you before I go, interest rates are, the Feds did release a thing in January, kind of a minutes, that said that they are looking to raise interest rates in March simply because of all the things that have happened because of COVID, sort of the quantitative easing that's been happening since 2008. Monetarily, pretty challenging space for the Feds to kind of manage inflation. We've seen a lot of that happening. That's one of the things that's reflected in home prices. It's been reflected in cryptocurrencies and other things in the market. You're seeing that kind of pressure inflation-wise push upwards on that. Looks like the Feds are going to raise interest rates in March. Just know that for every point that the interest rate that gets raised in interest rates, it lowers people's purchasing power significantly. And so if interest rates now for a 30-year fixed are somewhere in that 3 to 3.5%, if that raises a point to 4 to 4.5%, it eliminates the number of buyers that can actually buy at these higher levels. I don't think it's a total relief valve on what our inventory situation will be or continues to be, but I do think it will have an impact if you're looking to sell. So if you're looking to sell in the next little bit, or you want to try to capitalize on this kind of amazing appreciation that's happened in our region for the last little while, knowing to be ahead of that interest rate raise in March is probably going to be a positive thing. I appreciate everybody that's always done business with me and worked with me. I'll try to send these updates out if they're helpful. And I hope it gives you guys a good sense of what's going on in the market and quick synopsis. And I'll try to do that as often as I can so that you guys that are out there get a good grip on what's happening in the market. Appreciate every one of you. Thanks for listening, and we'll see you soon.